We're diving into a major development that's shaking up the markets. Warren Buffett's recent sale of $277 billion worth of shares. With such a colossal move, many are asking, what is Buffett planning to do with this money? And does this signal the end of the stock market as we know it? Let's break down what's happening and explore the broader implications. Warren Buffett's recent moves have indeed caught the attention of the financial world. Berkshire Hathaway, Buffett's conglomerate, has been selling off substantial amounts of stock, including a significant reduction in its stake in Apple Incorporated. This has led some to speculate that Buffett is preparing for a potential downturn in the stock market. While Buffett's actions are influential, they are just one factor among many affecting market sentiment. The drop in the 500 index, which fell around 3%, may partly reflect Buffett's sales, but it's important to remember that stock market fluctuations are driven by a complex mix of factors. Berkshire Hathaway's cash reserves have reached a record $276.9 billion, which is comparable to the levels seen before the 2008 financial crisis. This large cash pile suggests that Buffett might be positioning himself to take advantage of potential opportunities if market conditions deteriorate. The timing of these disclosures is crucial. The markets are currently experiencing heightened vulnerability due to a combination of factors: high asset prices, declining excess savings, and recent economic data showing an increase in unemployment. This has created a sense of instability, which was exacerbated by the Federal Reserve's recent decision to hold interest rates steady and a Bureau of Labor Statistics report indicating rising unemployment. Number 1. Warren Buffett's recent stock sales. An overview. Warren Buffett, the renowned chairman and CEO of Berkshire Hathaway, has recently made headlines for selling a staggering $277 billion worth of shares. This significant move has prompted widespread speculation about his motivations and its potential impact on the financial markets. To fully understand the implications, it's essential to examine the context of these sales, what Buffett might do with the proceeds, and the broader market environment. Number 2. Understanding the scale of the sales. Buffett's decision to sell such a large amount of shares represents one of the most substantial moves in recent financial history. Berkshire Hathaway's portfolio includes significant stakes in numerous high-profile companies, and reducing these positions so dramatically indicates a strategic shift. Buffett, known for his value-oriented investment approach, typically makes adjustments to his portfolio based on careful analysis of market conditions and future prospects. Number 3. What might Buffett do with the $277 billion? With $277 billion freed up from these sales, a key question is how Buffett plans to deploy this capital. Historically, Buffett has used large amounts of cash to make strategic investments during market downturns or to acquire undervalued assets. This approach was evident during the 2008 financial crisis when Berkshire Hathaway made several high-profile investments at bargain prices. In the current market environment, characterized by significant volatility and shifting economic indicators, Buffett might be preparing to seize new opportunities. He could use the funds to invest in companies poised for long-term growth, acquire undervalued assets, or strengthen Berkshire Hathaway's existing holdings. Another possibility is that he could be positioning Berkshire Hathaway to weather potential future economic challenges, such as a broader market correction or economic slowdown. Number 4. Is this the end of the stock market? Given the scale of Buffett's sales, some are speculating that this could signal the end of the stock market as we know it. However, it is important to approach this notion with caution. Buffett's actions, while impactful, are just one element in a complex web of market influences. The stock market is driven by a multitude of factors including economic data, investor sentiment, and geopolitical events. Market reactions to significant sales by influential investors like Buffett can be pronounced, but they do not necessarily indicate a fundamental collapse. The recent decline in the S&P 500 index, which has dropped around 3%, reflects a combination of factors including broader economic concerns and market sentiment. Buffett's sales may contribute to market volatility, but they are not the sole determinant of market trends. Number 5. Current market conditions. The broader economic environment is currently characterized by several key factors that are contributing to market instability. Recent data shows rising unemployment rates, which have reached a nearly 3-year high. This, combined with high asset prices and declining excess savings, has created a sense of uncertainty among investors. The Federal Reserve's decision to hold interest rates steady, despite previous expectations of a potential rate cut, has also added to market volatility. Investors are reacting to these developments, leading to fluctuations in stock prices. In this context, Buffett's sales are part of a larger pattern of market behavior influenced by multiple economic indicators. Number 6. Implications for investors. For investors, the key takeaway from Buffett's recent stock sales is the importance of staying informed and considering a range of factors when making investment decisions. While Buffett's actions are significant, they should be viewed within the broader context of market dynamics and economic conditions. Investors should remain vigilant and consider how broader economic trends, such as changes in employment, interest rates, and consumer behavior, may impact their portfolios. Buffett's strategy often involves positioning for long-term growth, and while short-term market fluctuations can be unsettling, it's crucial to focus on long-term investment goals and strategies. Number 7. Broader economic context. The timing of Berkshire Hathaway's disclosures comes at a particularly sensitive moment for the markets and the economy. Recent economic indicators have shown a rise in unemployment and a potential shift in consumer spending patterns. High asset prices combined with declining excess savings and a rise in unemployment have created a precarious economic situation. These factors contribute to a sense of instability in the markets, which has been reflected in recent stock market declines. The Federal Reserve's decision to hold interest rates steady despite expectations of a potential rate cut has also added to market uncertainty. The combination of these factors has led to a sentiment shift among investors, which is impacting stock prices. Number 8. Looking ahead. So, what should investors take away from these developments? Investors should view Buffett's actions within the context of his long-term investment strategy. His sales could be a preparatory move for future opportunities or a way to manage risk in a volatile market. It's also essential to keep an eye on other economic indicators and market trends. While Buffett's moves are noteworthy, they are part of a larger landscape of factors that influence market behavior. Conclusion: navigating the uncertainty. Warren Buffett's sale of $277 billion in shares is a noteworthy event that has generated considerable discussion about its implications for the stock market. While it is a significant move, it does not necessarily signal the end of the stock market. Instead, it highlights the ongoing volatility and complexity of current market conditions. As investors navigate this period of uncertainty, it is important to consider the broader economic landscape and remain focused on long-term investment strategies. Staying informed and understanding the context of major financial decisions will help in making well-considered investment choices and adapting to the evolving market environment. Thank you for spending this time with me today. I invite you to join our community. Hit the subscribe button and don't forget to click the bell icon so you won't miss any of our future videos.